Okay, hello everybody. Welcome to another Rosecut monthly call. Plenty to talk about, Daniel. We've had a period of volatility, then we've had something of a small rally through the end of May. I think what's beginning to settle in now is that the inflation numbers, certainly in the US, are not going down, not for the time being. There are select indicators that are beginning to sort of chug downwards, but overall, the last core CPI is quite high. It's 6% headline at about 8.5%. So lots from markets to worry about. And I guess we've seen a continuation of volatility across asset classes, not just in equities, but FX, crypto as well.
Yeah, and certainly the big news on Friday was that inflation number. And it's interesting to look at the way that different central banks are talking about inflation right now. Because in the US, you almost have the Federal Reserve trying to bluff their way through it and try and talk down inflation expectations by saying there's lots of stuff we can do. We can do 75 basis points instead of 50 basis points as an interest rate hike every month. So, well, every time they meet, sorry. Whereas in the UK, you have a slightly different message. You've got Andrew Bailey, who's the head of a Bank of England, saying really there's not that much we can do about inflation. And that really is because of the cost push pressures. So the problems with the energy markets, which are feeding through to a higher cost of living. So that number came out on Friday. Markets sold off quite a bit. And as you say, some of the lead indicators for risk, and I include crypto in that, has had a really bad weekend this weekend. And I should add, we're speaking on the 13th of June, just for context. The other news that's come out this morning, this is Monday morning, UK GDP numbers were showing a drop. This is month-on-month numbers. So that feeds into this fear of stagflation, which we've been talking about for a few months. And by way of reminder, that's when you have a stagnant economic growth, so very low, but you still have inflation coming through. And so with that said, that's the fears about economics. And I think you've got a few thoughts on how you think it could now feed into markets, particularly credit and so on. Do you want to spell that out?
I will, of course, and then maybe we come back and talk about some of our positioning, because we've actually been quite conservative, I think. Thank God. So when we saw the big sell-off in May, a whole range of stress indicators were hitting levels that were normally associated with periods of real economic stress and recession. 2001, late 90s, 2007, 2020, and some people sort of poo-poo this as being markets getting ahead of themselves. I think what's happening now, and you mentioned the GDP number in the UK, is that the economies are beginning to feel the impact of early tightening, and it's only early tightening so far, and they're beginning to see the impact of market volatility. And how this typically goes is that when you get tighter liquidity, that begins to feed into the credit system. Typically you get higher credit spreads, so riskier investments have higher interest rates, so companies with debt-laden balance sheets see their interest rates rise. The same for countries. We've seen Greek debt go from 0% interest rates a year or two ago to about 4% now, and so on and so forth. So my sense is that across the summer, we will probably see a rise in credit risk and credit stress, which will make for more broad volatility. It will, I think, sort out really good companies with strong cash flows from those who are operating on a dream. And that goes not just for public companies, but also those in the in the private sort of VC space as well, where we're beginning to see some consolidation. And I think it makes ultimately for weaker economic growth, and it may produce market conditions that at some point the Fed and the other central banks may just have to pause their tightening path. And give the economy room to breathe as well. I don't see that happening anytime before October. So I think the watchwords really would be credit risk for the next 4 to 5 months. Yeah,
and as some of us will remember from 2020, once credit risk starts to hit markets, things can move quite quickly.
Yep.
Especially if it happens over the summer months, which is often when you have lower volumes. And in fact, we've got an option expiry date coming up this week. So that's when a lot of the investment banks and trading houses will be adjusting their books. So it should be quite noisy over the next week or two. In terms of positioning and the Rosecut portfolios, in terms of credit risk, we don't have much. We've been very proactive with reducing that risk. So we adjusted those positions back in March. We still have a large cash balance within portfolios and an underweight position to equities. So that's why our portfolios have been more defensive than the ones you'd find run by other firms in the market. Overall our message, I guess, is really to stay defensive, stay patient. In bear markets like this, what you want to concentrate on is holding on to what you've got and perhaps opportunistically taking trades when you see them. But really, you're waiting for the time when something changes and a new bull market starts, and you want to be ready for that. And so that's why we have that cash set aside and a defensive position in waiting for the next bull market to start.
Yeah, absolutely. And I was going to sort of make a provocative comment that it's a good time to be old and have grey hair like me, because at very, very least, seen a few cycles and a few of these crises. And some of the more experienced investors I know, I think obviously they find the volatility in the macro contagion troubling, but they are in some ways looking forward to valuations coming down, being able to buy stuff that will deliver really good returns into the future.
Yeah. Well, as a Yorkshireman, I can tell you I like good value. So
Good.
I'm happy for the market to fall a bit more and get a bit cheaper. Thank you, Mike.
We look forward then to the next update and hopefully the chance to deploy some of the cash that we have.
Yeah. Thanks, Mike. Look forward to speaking to you next time.